Really interesting thing with these online businesses, especially the ones in the range that I talked about, is if you look at a publicly traded company, if you look at a stock, the multiple that they're valued at, the multiple that they're trading at, is usually based on how fast the business is growing. Where is it expected to be a few years from now? Some of that plays into play, some of that is part of the way you value online businesses. But even more so than that is how likely are these earnings going to continue?
Before we get into a more detailed part of the conversation, I would like to define or explain some of the items that we're going to be talking about today because just a year ago, I had no idea what any of this stuff was. Like, I've actually had guests like you reach out to come on the show, and I actually turned them down as guests because not because their story wasn't interesting, but I didn't really understand what they wanted to talk about. I didn't get it. And fast forward a year to where we are today, I understand it now. I'm actually involved in this business model myself. I've built and sold some websites. So I actually have a bit of understanding now. But before I had no idea. And I'm sure the audience is in a similar boat to where I was. So I wanna start there, start maybe define a couple important concepts that people need to have an understanding of as we go throughout this conversation. So to start out, what is a content site or a niche site? And how does that business model work?
Yeah, good question. So basically, a content site or a niche site is a popular website that oftentimes receives the majority of its traffic from Google, and the way it makes money is with affiliate links or ads. So one of the popular examples many readers might be familiar with would be New York Times's Wirecutter. You go to the site, you see reviews for different types of products. Let's say best carry-on luggages. They review the top 5 carry-on luggages. And the way that website or that business makes money is if somebody clicks on a link and they go to Amazon or they go somewhere else and they buy that luggage, that website will get a certain fee.
And so you say popular sites, they get traffic from Google. What does that mean? What does traffic from Google mean? And how does that happen? How does somebody build a site that gets traffic from Google?
Yeah, good question. So when I say gets traffic from Google, what I really mean is most of the visitors to the website, they didn't type the domain or the name of the website into their search bar and find it that way. Let's go back to my luggage example. Let's say I was looking to buy a new carry-on luggage for traveling. I would go to Google, start there, and say best carry-on luggages or lightweight carry-on luggages or expandable carry-on luggages. I would see a number of results, and maybe one of the first results I would see is this review site reviewing different types of luggages. So prior to me visiting that website, I might have never heard of it, and then I land on that site, read their content, and maybe click an ad or click a link.
So a couple years ago, I had some side projects that were not niche sites. They were just totally unrelated, like little side hustles, side projects that I had. And I would create the websites and for these little projects that I had, and I would go to Google and I'd search like very specific, the name of what I was trying to do wouldn't even show up. And I'm like, what the is going on? Like, why? I don't get this. And I honestly didn't spend a lot of time to dive into it and figure out what was going on. But fast forward 3, 4, 5 years later to where we are now, and I'm like, oh my God, like I understand like everything that I was missing. So for people who are wondering, like, okay, I get somebody will search something, these websites show up, but like how does somebody create a website and actually get their website to show up in those SERPs is what we'll talk about, the search engine result pages. How do they get them to actually show up in Google?
Yeah, so Google, as you would expect, has a complex algorithm, and it'll look at websites that it considers trusted and relevant based on what you're searching for. So, of course, if it has whatever keyword or whatever phrase you searched for multiple times in their page, that'll help. However, another major ranking factor, another factor that determines which site is at the top and which site might be on page 50 is if other sites link to it as well. So going back to that Wirecutter luggage example, if it's a really well-written article that a lot of other websites are linking to, Google will see that as a signal and say, hey, this is a really good site. It has high authority. A lot of other people are linking to it. We're going to move this up in the results. So that's a really oversimplified version of it.
And I know another topic we'll probably hit on throughout, like, the types of businesses that you invest in with your fund and what you guys are doing with Web Street, but it is FBA businesses. So explain what an FBA business is and how that business model works.
Yeah. So an Amazon FBA business is investing in the business that owns the products being sold on Amazon. So what most people don't realize, majority of the products, probably somewhere around 60 to 70% being sold on Amazon, those are private label brands. So those are anything from small to medium individual businesses contract manufacturing these products and selling them on Amazon. Now, of course, there's some very big brands as well, but most of the sales on Amazon are coming from third-party sellers. Amazon will warehouse the products. It'll handle the payment processing, the returns, the customer service, and all of that. But the actual brand owner behind the product, that's an Amazon FBA business. That's what one of the monetizations or one of the business models that we look at closely.
And FBA, for those listening, stands for Fulfillment by Amazon, which is exactly what Mike was just saying. Is here is you have your products, and rather than you hear these stories of guys who just start companies and they might be packing their deodorant in their living room and then shipping it out. Rather than doing it that way, you could send all your product to Amazon. They handle kind of all the logistics for you, kind of like a 3PL in a sense. So that's what FBA by Amazon is, or FBA business is. Now, the next thing I want to talk about, Mike, is I want you to tell us a bit about some of the biggest players in the industry, such as Red Ventures. That's just one I'm familiar with. And I want to talk about this real quick because I think hearing about the size and the scale of some of these operations can really provide legitimacy to this idea of these types of online businesses like content sites, niche sites. Because when I first got into it, I was like, okay, you might make a couple $10, $50, $300, or maybe even a couple $1,000. Like you might do really, really well, make a couple $1,000. And then I started hearing about some of these guys that are at the scale and size of Red Ventures and even smaller than them still, but very successful. So talk to us a little bit about companies like Red Ventures and give us put some legitimacy to this idea of the business.
Yeah, so Red Ventures is one of the bigger players in the space. They basically own a whole bunch of content types of sites, like we talked about. They're a big company. They have about 4,000 employees, lots of readers every month, and they've purchased some really big properties that a lot of people might be familiar with. So they've bought CNET, which is a website that does all kinds of reviews, all types of news for $500 million, for $500 million a couple of years ago. They also own Bankrate, which they paid over $1 billion for. And they own a whole bunch of brands that people might be familiar with, Healthline, and multiple other brands. So, and they have the exact same business model as these content sites that we've talked about. So they create content that people are searching for, and then they make money with affiliate links and advertising.
What's interesting, or was at least interesting for me, is that I didn't realize the breadth, I guess, of how this business model works. Like once I understood the business model, I started seeing them everywhere. I was like, Credit Karma. Credit Karma is essentially a content site or a niche site. Like their niche is finance and credit scores specifically, and they make money by all the affiliates that they have. If you're a user of Credit Karma, you go in there, you get ads for credit cards and personal loans and auto loans, and they get a fee for every time you click that. That's how they provide their service for free. They get you into their website, they get users, try to get as many users as they can using the product, and they give you these affiliate ads and they make money that way. And then even it goes to the side of like free applications, like free mobile apps. Like you go in there and your mobile app, whether it's a game or something else that has ads, that's essentially what a niche site is. Like you're trying to get as many users as you can to your site. That's what these apps are doing. They're trying to get as many people to the apps as they can, and they just show you display ads. And it was really mind blowing to me when I learned about this business model and just how widespread or how wide reaching it really is.
Yeah, it's definitely fascinating. Before getting in this industry, I mean, when I used to browse the internet, I had one of those ad blockers on. So for a long time, I didn't see any of these display ads. And then when I started working in the industry, I turned all of that stuff off. But exactly like you said, it's eye opening now. When you're on different websites going about your day, you start looking at the business model behind those. Behind those websites, you're like, this is how they make money. This is the service that I use. This actually makes sense. This is what they're doing.
Yeah, you don't realize the scale of them either. It's pretty interesting. It's actually really, really interesting. It's been something, people listening to the show know haven't been hosting for a little bit. I just came back to hosting the show, and I've been really involved in this part of like online business for the last year. I've been really diving into learning as much as I can. It's really, really fascinating to me. You mentioned ad blockers. How much of a concern for online businesses like this is or are ad blockers?
They would typically block affiliate ads, but they wouldn't block inline content. So if we go back to the same example where you're looking at a different luggage reviews, those would be inside the content with links. But if there's an ad on the side of it, that ad would probably get blocked. They've been around a long time. They're built into some browsers, so it's nothing new. It's something that's been around for quite some time.
So they do block display ads, but you're probably okay from the affiliate side of things.
Correct. Depending what type of affiliate ad you have, but that's correct.
So ad blockers, maybe not too big of a deal, but one of the maybe existential threats, maybe so, depending on what people think, is facing this business model right now, and that's AI, and specifically Google's SGE. So, like I said, some people aren't too worried about it. Others are really worried about it. I'm curious how you see this impacting these business models that we've been talking about, specifically niche sites, content sites, affiliate sites, maybe not so much the FBA businesses, but content, niche sites, and affiliates. And then also explain what Google's SGE is for people who don't know.
Yeah. So in short, I think it's going to absolutely destroy low quality content sites. So great example of a low quality content site. For example, I started doing more cooking lately again, and one of the things that I searched for is how long do I bake chicken in the oven for? And if you go through the results, you'll notice a bunch of really crappy sites. So you go to the site, and all you're trying to find is the answer, whatever it is, 20 minutes at this many Fahrenheit or Celsius or whatever the answer is. But you're reading all this crappily written content. You're seeing ads everywhere. You're seeing images that are completely irrelevant for you. They're talking about other stuff because they're trying to make the length of the article better because they're trying to game the Google algorithm. And well, that's just a really bad user experience. So what Google has been doing for years, it has been a little bit of a cat and mouse game with people that are building these sites and trying to get them to rank, because they'll reverse engineer the Google algorithm and they'll try to get it to rank. So going back to that same example, they've realized, okay, if I have longer articles, Google will look at it as a higher authority, better quality article. So I'm just going to add all this crap content to make my articles longer. And then a few months, a year later, Google will see a whole bunch of those articles popping up and they'll say, well, that's crap. That's clearly not what the user wants. Let's penalize those types of sites. So there's always been updates and always changes that impact content sites a lot. Now, the reason I'm using that example, let's say I started my query on ChatGPT for the same thing. How long do I bake chicken breasts in the oven? And I'm currently outside of the US. Give me an answer in Celsius. We get a really nice 2 sentence answer. Now, as a result of that, Google is making more changes to its. As far as I understand, I'm definitely not an SEO expert on this, but as far as I understand, Google is making more searches to its algorithm to be competitive with ChatGPT. So that way, people don't start using ChatGPT as their first point when they're looking for information. That way, they're using Google. So using that same example, how long do I bake chicken for? You might see some snippets at the top of the Google search results, which is basically you'll see the question and then you'll see an answer right below it. So the new round of changes that Google is planning to roll out, we'll see exactly what happens. As far as I know, it hasn't been fully rolled out yet. They're basically looking to do snippets and steroids, and a big thing of that, they're going to provide the source where they found the answer, but a lot of people might not be clicking on the source, like we've seen with snippets currently, and they're going to provide less sources. So this is something very, very new. We're all waiting to see what happens, how it gets rolled out. But I definitely think it's going to have a much bigger impact on the lower quality sites that are creating kind of crappy content that readers don't really have a great experience reading in the first place. And we've seen those types of sites get absolutely destroyed over the last few years. more and more. So for anybody looking to get into the content space, the big thing is like if you're buying a property or if you're building something yourself, I think you have to ask yourself like, does this create value to the reader? Because you can do all these things to game the Google algorithm. They might work short term, but you're just an update away, or you're just one change away from losing a lot of traffic. So bit of a long winded answer here, but hope that's what you were looking for.
Yeah, so to your point about chicken, I have searched that many times myself, like almost that exact same query. And I didn't really think much of it years ago, but now that I'm in this world and I own these businesses, I see it the same way. And I'm like going through these articles, I usually will just click the first one. And there's like 3, 4, 5, 6, maybe 10, 12 paragraphs of all this stuff that's just like filler content. It's like, where did chickens come from? Where are they originated?
Exactly.
How long are they babies? Like all this stuff about chickens. And then at the bottom, it'll finally say, okay, cook the chicken for 6 minutes at 400, whatever the answer is. And like, I got to scroll through all this stuff just to get there. And, like you said, people are doing that to game the algorithm, the
Well,
Google algorithm.
well, the worst thing is when you when you spend 5-10 minutes searching for the answer, and then you get to the answer and they tell you something like, "Oh yeah, stick a thermometer," and when it reaches this temperature, you're good, and it's like, all right, if I had a thermometer in hand, I clearly wouldn't be searching for this. So Google, Google is really good at trying to figure out if the thing that people clicked on makes them happy. So one of the things that these sites with this long content are trying to do on purpose, Google will measure how long somebody is on the page. So if they see you clicking the page and leaving in a second, right away, they'll penalize that site, or not necessarily penalize it, but they'll rank it lower than they would another site where people are really enjoying the content and reading it. But that example that we just talked about, that's a clear people trying to game the system and not really delivering an optimal experience. And I think more and more of that stuff is going to go away.
And to your point earlier, that is super complex. Google's algorithm is really complex. They not only know how long you're on the page, but they know, and again, this is all theory based on what people think. And there was a leak of basically, I think it was Russia's Google. Basically, their whole algorithm got leaked. So we kind of, in this SEO world, we can kind of say, okay, this is what they're doing. Maybe Google's doing something similar, but to an extent, like they think Google knows that not only how long you're on the page, but if you go back to like if you hit the back button, go back to the search engine results page and then click another page instead of getting your answer and being done, they see that as a bad thing. Or versus if you just X out of your browser after only going to your page, they said that tells Google it's a good sign because they're like, okay, he or she probably got their answer that they need and they're good. And like you said, they'll bump them up maybe in the algorithm.
Mm-hmm.
And so
Absolutely.
the SGE stuff is really interesting, which is search generative experience. And basically, like you said, what Google's doing now is rather than you searching something and then having to click on a search result and going to a website and finding the information, what they're doing is they're going to basically have AI answer the simple questions, like you said, about the chicken and some other simple things. And so now, if you think about the listeners if you think about the incentives of these websites, they make money by the number of visitors that they have that come to the website because then they can show more ads or sell more affiliate things. And so if Google is providing a response via AI right at the top of the search engine, the users aren't going to know necessarily that that's even AI. It's just going to look like, oh, I got my answer basically without having to click on anything. And so that's going to reduce the number of people that are going to the websites that are ranked there. And that's going to reduce revenue. And so that is why I said it's kind of an existential crisis right now that's facing this business model because a lot of people are worried that their traffic is going to go significantly down.
Yeah, I mean, I think it really depends on the niche as well as the quality of the content. So, our fund is definitely not looking to buy any basic recipe sites anytime soon. But in fairness, even before all of this was more mainstream in the news a year or two ago, we weren't buying those recipe sites as well for other reasons because we realized it's probably a matter of time before they get penalized somehow or before they lose traffic somehow. We didn't know exactly what it would be, but we realized this is not good for the end user. This is just a temporary arbitrage between being able to get traffic easily and monetizing it. This is not a real business. So and there's a lot of this AI stuff is in the news now, and for good reason. It's going to change the world. But one important thing to keep in mind with content, it seems like one of these 100-year floods happens to happen every 2 to 3 years. So Google has multiple times changed their algorithm. Way back in the day, you could whatever you had in the domain name would determine how well you rank. So going back to the suitcases, if you owned bestcarryonluggage.com, you would be the top result for anything talking about carry-on luggage. And then that was no longer the case. And then there's been a whole bunch of changes to the algorithm. So it's definitely an ongoing thing. And the constant here is that things constantly keep changing for the way traffic flows to these websites.
Mike has mentioned penalizations a couple times. And so what that means is Google throughout time, a couple times a year, once a year, depending on their own schedule, will come out and say, okay, we don't like that certain sites are doing this. And there's tons of different reasons as to why they'll do these. But basically it's like Google essentially like passes their own like law, essentially is like the way I could clarify it a little bit, or make an analogy is like they essentially pass a law, and then any site that's like quote unquote breaking that law, they get penalized, and now they're not going to rank as high in the search engines. That has nothing to do with AI, and that's not anything new. It's kind of been something you have to deal with in this business model for a while now. What are some other risks outside of just ad blockers, AI, and Google updates that are associated with starting and investing in online businesses like this?
With content sites specifically.
Yeah, content sites, niche sites, affiliate sites, FBA sites, all of them.
Yeah, so I'll keep it to content because I think the FBA risks are significantly different, but definitely happy to expand on those as well. So one thing that we haven't talked about is competition. So let's say you have a lucrative niche. Let's say it's a larger niche that for some reason doesn't have a lot of competition, and then Red Ventures or one of Red Ventures' assets decides to enter the niche. You're probably not going to have a good day, simply because they have domains where if you add new content to those domains, it'll probably rank really quickly and it'll outrank you. So just like any business, it's competition is a big thing. And then there the other downside with I guess both content sites and any types of online businesses is these are not passive assets. So they require a specialized skill set to run these assets, and they require quite a bit of time to run them. And oftentimes, if you're in lucrative niches or you have larger assets, you're competing with people that have been doing this for quite some time and that do this for a living.
So we spent some time, 5-10 minutes now, talking about some of the risks and the negative sides of this. But I know there's a lot of positives. I really like this business model. I've been involved with it. Like I said, I know you're really involved with it. So what are some of the intriguing sides of these businesses, this asset class, and what does this asset class do better than other maybe more traditional asset classes?
Yeah, well, the most fascinating thing from an investing perspective is the multiples at which you can buy these businesses at. So, especially if you focus on the relatively smaller transactions, let's say 200,000 to $1 million, you could acquire one of these businesses for 3 to 4x annual profits. And that's what makes it so attractive. If you buy something for 3x annual profits and it just stays the same, in 3 years, you're going to recover your initial investment. Now, the difficult part is the just stays the same, but there's of course opportunity to grow these assets as well.
Yeah, if people listening to the show, Mike, are mostly stock investors. Some are entrepreneurs, some are side hustlers, but most of them are stock investors. And so for the audience, what Mike is saying, like, we're always looking or often looking at multiples when we're making stock investments. We're looking at PE ratios, price to sales, et cetera. And what Mike's saying is you could buy these businesses at 3 times basically PE or less. You get 2 PE. So like think about that from a public equities uh, situation. Like how imagine if you could go out there and buy a great business that you're interested in that has cash flow and you could buy at a PE of 2 or 3. Like that's a really intriguing opportunity. And like Mike said, there's some active piece to this where there isn't necessarily in the stock market. You're not going to buy that stock and go out and run that business, but it's still the multiples that you can get as both a buyer and a seller are interesting, because on the seller side, you're getting 36 times your monthly revenue, and that you can upwards of that or more. And that can be really intriguing as a seller too. So It's this interesting dynamic between the multiples both working for the sellers and the buyers. At least that's been my experience. Do you see that most sellers are pretty happy with the multiples, Mike?
Yeah, yeah, of course, especially if you consider that a lot of these sellers are serial entrepreneurs and they take a business from, or they build it from scratch, or they buy it and grow it significantly, and then they take that cash and reinvest it into other businesses and do the process all over again.
Are those the multiples that you're seeing, like 36 to 40 times monthly earnings? Is that roughly what you see in the marketplace?
Yeah, yeah. I would say our average for the acquisitions we've done, we've bought 34 assets over the last couple of years. They've varied quite a bit, but I think our average has been in the mid 30s. And there's something to be said here. Like sometimes you can pick up assets for 20x, so just under 2 years annual profits. And sometimes, you need to pay up significantly for the assets, 4 or 5x. What you buy it at will, of course, determine your rate of investment. So if you buy something for 3x, that's 33% rate of return annually. But that's not the only thing to look at. You also have to look at the risk, the likelihood of those earnings continuing, and oftentimes the lower priced assets are worse. And if you think about it from a seller's perspective, if you were really confident in the ability of this business to continue making money at this level or higher, would you sell it for a year and a half worth of earnings? Now, of course, there's always exceptions, but it's important to remember those are the exceptions.
For somebody that's listening, think about this. If you have a site that makes $2,000 a month, it's doing well, it's a strong brand, et cetera, and you could sell it for 40 times your monthly earnings. You have an asset that's only making $2,000 a month. I mean, that's good, but not, it's not crazy. You can sell that for $80,000. And that's the power of it as the seller.
And the most exciting thing is, like, let's say that this was one of your first assets that you've built, or you've built a number of these assets before. Oftentimes they'll take that 80,000 and they'll go out and build five new assets with that, and maybe three or four they'll be able to sell again.
What do you see for characteristics that increase the value and the multiples that you could sell a business for? And what do you see that actually reduce the valuation and reduce the multiple you could sell it for?
Yeah, so the really interesting thing with these online businesses, especially the ones in the range that I talked about, is, if you look at a publicly traded company, if you look at a stock, the multiple that they're valued at the multiple that they're trading at, is usually based on how fast the business is growing. Where is it expected to be a few years from now? Some of that plays into play, some of that is part of the way you value online businesses. But even more so than that is, how likely are these earnings going to continue? So our fund would be happy to pay 5x annual, 60x multiple for something where we have a very high confidence that there is a high floor on those earnings. We have a very high confidence the earnings won't go anywhere, no matter what happens with ChatGPT or any of the other risks that we talked about, especially if we see opportunity to grow the business. So as you'd imagine, the longer of a track record you have, the easier it becomes to project out what's going to happen in the future. And going back to the content sites, you can see what's happened in the past, the site, when there have been changes, how it's been impacted by competition. So generally, older businesses are worth more, all else being equal. Larger businesses tend to be worth more because you get more of a professional buyer pool that's willing to pay more. The exception is on the very low end. If you look at businesses probably under 100 grand, oftentimes those go for ridiculous multiples because people are really excited to get into the space and they're willing to overpay. Uh, yeah, I would say anything that makes them less risky. So earlier we talked about traffic. Let's say you have a website that doesn't receive 100% of its traffic from Google. Let's say it has an email list where it sends a newsletter, and that's how it gets a lot of the traffic. Let's say that it has some social media traffic. Let's say it has a Instagram account or Facebook account or whatever, and that's where it gets some traffic. Now, and let's say Google traffic's only a third of it. Now, if something happens to Google, let's say something that none of us were projecting, let's say AI just absolutely crushes Google in the next week, and we never hear of Google again, I think that's probably unlikely, but that business wouldn't go from 100 to zero. It'd probably go from 100 to 70 because it just lost one third of its traffic.
And also, you could say the same about revenue as well. So if you don't make
Exactly.
100% of your revenue from display ads. Say maybe you make some from display ads, you make some from affiliates, you make some maybe from your own products, maybe you sell ads in your own newsletter, maybe you have a YouTube channel and you make some from AdSense. So like you can also increase the multiple of your business and the value of your business of these online businesses by diversifying your revenue streams as well.
Absolutely.
What drove you to start a fund investing in these types of businesses and what you guys are doing at Web Street? Was there a legislative change that made it possible when it previously hadn't been? Like what got you there?
A little bit, but that wasn't the main thing. So prior to founding Web Street with my business partners, Justin Cook and Joe Magnotti, I worked at Empire Flippers. So that's a online business broker that was founded by Justin and Joe. And what they do is they sell online businesses, websites, Amazon FBA businesses, SaaS businesses, anything that makes money online. And one question that we kept getting over and over again over the years was, hey, I think a 2, 3, 4x annual multiple in profit is really, really attractive. I want to buy these businesses. I have capital to deploy. I want to invest in them passively. How about I buy one of these businesses and you guys run it for me? And the answer was like, no, get out of here. We don't do that. Or like, can you match me up with somebody where it's like, well, not really. I can't really vouch for them because I don't know how they would be as an operator. So we heard this question over and over again for many, many years. So we had all this unmet demand of people that wanted to passively participate in these online businesses without having the skill set or without having the time to actively manage them. And we already had an audience of people that know how to manage these businesses because we had a marketplace where these businesses are being bought and sold. And like I mentioned earlier, a lot of the sellers are repeat sellers. So they'll go out, build one of these businesses, sell it. They might buy one, grow it, and sell it. Oftentimes we saw the same assets being bought and sold multiple times, and we could see exactly how it was doing. So we had this built-in market demand of people that wanted to invest passively. We had this large audience of people that knew how to run these businesses. And then we had this light bulb moment. I don't think you can even call it a light bulb moment. It was kind of like, all right, we finally decided to do what people were asking us for years to do. And then we launched Web Street, or formerly Empire Flippers Capital, standalone company. Initially shared a lot of the resources with Empire Flippers, but now completely standalone, no shared resources, and buys businesses from anywhere, including other brokers.
Hey, so I'm going to talk to you about Foundation Devices, which is self-custody done right. They built a premium grade hardware wallet called Passport right here in the United States, and it's fully open source verifiable. It's the most intuitive Bitcoin hardware wallet designed with a UX reminiscent of a simple feature phone, so you'll know how to navigate and use it the moment that you pick it up. Get your Bitcoin off the exchanges and into your own hands in just a few minutes. Experience the peace of mind that comes with taking ownership of your own keys. After a massive May sellout during the Bitcoin Miami 2023, the Passport is back in stock at foundationdevices.com. It's Bitcoin only, it's open source verifiable, it's got a completely offline air gap security model, it's got a gorgeous design craft, and it's all premium build materials. If you've been thinking about getting your Bitcoin off exchanges, which I highly recommend, then this one's for you. So go check out this awesome hardware wallet at foundationdevices.com/fundamentals, or check out the Passport link in the show notes below to learn more.
So explain exactly how it works from the investor side, maybe as the portfolio manager or basically the property manager, if you will, of the asset that you guys buy. Break down that process for us.
Yeah. So it's fairly simple. So when we designed this, we rolled it out in phases and we tested through it. And one thing that we wanted to do from the beginning was try to line up everyone's interest. We had two goals: go out and find the best portfolio managers that we can find, and then line up the investor's interest, the portfolio manager's interest, and our interest. So what we do is we go out and raise money from investors. Mostly accredited investors. We recently opened up a crowdfunding test that we might continue, but mostly accredited investors. So high net worth individuals looking to deploy capital. Our average investment is probably 50 to 100 grand from the accredited investors. Once we raise the money, well, first, sorry, let me back up here. So first we go out and we find portfolio managers. We look at a track record of building these businesses, buying them, growing them, running them, and selling them. And we look at a lot of portfolio managers and we admit a very small percentage. Once we have our portfolio managers, we'll go to our investors and say, hey, these are the 4 funds that we have open right now. We have these 4 experienced portfolio managers. You can invest in these 4 different funds for, let's say, 50 grand. They'll get you a stake in each fund, and each fund is going to buy multiple assets. And the funds are different. So one might be a content fund, one might be an FBA fund, one might be a Kindle fund, one might be a software fund. And then the investors give us the money. Then the operators or the portfolio managers go out and buy these businesses. We of course have oversight. We make sure that whatever investment criteria they laid out to investors, that they will buy those businesses. So if there's a guy that has a deep experience in content businesses and he comes across a e-commerce FBA business and he wants to try it out, we would veto something like that. And we have a whole investments team that helps with the due diligence process and so on. And then once these businesses are bought, on a regular quarterly basis, the profits are split with the investors. So the investors keep 2/3 of the profits and 1/3 goes to the operator and ourselves. So, the attractive thing here is if you buy a business at 3x annual, if you get to keep 100% of the profits, you would be making, 33% a year. If you give up 1/3 of the profits, you're making about a little bit over 20% a year, which are still really, really attractive returns for a passive investment.
What are you seeing as the best opportunities today? Both maybe what you think personally. Do you think content sites, affiliate sites, maybe SaaS tools, Kindle, D2C e-commerce, FP&A, FP&A, do you like those personally? Or and also what are you seeing for investor appetite? Like what are investors coming to you saying they want? Which type of these assets do they want most?
Yeah, good question. I get this question all the time, or I used to get it all the time when I would talk to investors more. And the answer is always don't try to pick a winner. So if you're a passive investor looking to spend a certain percentage of your net worth in online businesses, I definitely would not try to pick a winner like content or FBA or SaaS or whatever the case is, because they all have different risk factors, and we've covered a lot of these risk factors already. So I think the key here would be diversification. I'm very bullish on FBA. That's actually my background. I went and started multiple Amazon FBA businesses, and I have some good experience with that, and I'm very bullish on that business model as well. SaaS, of course, with the recurring revenue stream. So I would say if you're looking to do this as a passive investment, try to get exposure to multiple different business models. If you're looking to get into this and buy these businesses or build these businesses from scratch yourself, my advice would be the opposite, because somebody that's good at running a e-commerce FBA business, it's a completely different skill set than running a content business. So I would say if you're looking to build them, run them yourself, see what skill set you have compared to what's required to run these businesses effectively. If you're looking to passively invest, you should be monetization agnostic. You should be just spreading out your investments over multiple different managers, multiple different monetizations and risk factors, and so on.
I personally think content sites and affiliate sites are like a good place to start. I'm not saying you have to do that like as an investor, but I'm saying if you're interested in starting one of these businesses, I think that's a good place to start, because then it opened, for me at least, it opened the world of like all of these opportunities. I had no idea of what was possible, the monetization strategies, how you can get traffic, like so much stuff that I learned from doing those two things that are, you can scale them to be massive. I have a friend of mine who sold a content site for $1 million. So like it can get big, but if even it's just a stepping stone, you can learn so much there. And maybe you go do e-com and D2C stuff, and you could take some of your SEO knowledge and traffic acquisition and drive that to an e-com product and do a D2C model. So I think you can learn a lot from content and affiliate sites that you can
Yeah,
use in these other models.
I completely agree. I think the skill set that you learn in running content businesses, and exactly like you said, you might continue running content businesses, and there are some very large content businesses like we talked about with Red Ventures earlier. But even if you decide to pivot in a different direction, that'll be a useful skill set. I know a lot of people personally that run service agencies, and that get a lot of their clients through content marketing from their past experience running content sites.
Yeah, absolutely. I've seen that as well. I'm curious. Tell me a bit about your FBA experience. What have you done personally? What were the products? What did you sell? How did that go? Just like tell me a bunch more about that. I'm interested.
Yeah. So let me think back in this. So joined Empire Flippers. My plan was always to go out and start my own business. Really enjoyed what I was doing with Empire Flippers. Ended up staying there for much longer than expected. Eventually left, started my own Amazon FBA business. This was in 2016, I think. Um, Launched the product. It just did really, really well out of the gate. I was like, wow, this is amazing. This is so easy. And then the product got absolutely crushed like a few months later. And then it went from doing really well to losing money consistently. And then it launched many, many more different products after that, probably making every mistake in the book that you can think of. And then after a few iterations, after a few tries, we finally managed to figure it out. So left over today, I have two Amazon FBA businesses. One in the kitchen supply niche, so boring products that restaurants buy, and then one in the fitness niche, like the medical device fitness niche. That's the bigger one of the businesses. I'm not actively involved in either one anymore. I have a business partner that runs all the day-to-day operations, and we have a team in place. So for me at this point, I'm more of a advisor or strategic investor. I still own half of the businesses, but now I'm passively involved, and it's also a good way for me to get an inside look at latest Amazon FBA trends, and that knowledge is helpful for the fund. But I would say, when we launched these businesses, we launched them quite a few years ago. The market has definitely changed a lot. It has become more competitive. Specifically, it has become more difficult to launch new products without an existing audience. So more difficult in terms of, let's say you have whatever product on Amazon and you're trying to get it to rank, just like you're trying to get your website to rank in Google. Of course, Amazon's algorithm is differently. It works differently. You're trying to get the reviews. You're trying to get traffic to your Amazon page, and so on. That part has become more difficult than it was 5 or 6 years ago. It's become more difficult to pick up reviews. So as it's gotten more difficult to launch new products, less competition has been entering the space. And as less competition enters the space, owning one of these Amazon FBA businesses is actually more valuable.
One last thing I want to touch on that listeners might have picked up on is that Mike didn't necessarily mention the exact product or for either of the businesses. And one of the things that really surprised me when I got into this business was that people are very secretive. And this is nothing like against you, Mike. This is just how the
Mhm.
industry is that like when you talk to other people, they'll tell you they own a content site or an affiliate site and they'll say, okay, maybe it's in the automotive niche or it's in the home niche or the fitness niche or whatever, but they very, very, very rarely disclose what the actual website is. And it sounds like it's the same for FBA businesses and things like that, just because, and for listeners, it's because there's so much competition and a lot of people have seen it's not that hard to just literally copy and paste somebody's blog post onto their own website and essentially steal everything that somebody else done. And I like to think people wouldn't do that, but people do that, and a lot of people have had that experience. So that's why it's very, very surprising to me when I came into this world in this industry to see how kind of close knit it is in terms of like what people are actually working on.
Well, in fairness, some of the FBA guys are a little nuts. So they won't even share what industry it's in. It's like, all right, there's millions of products in the kitchen that you won't even tell me what industry it's in. So some guys definitely take it too far. But we even do the same precautions in our funds. So as an investor, you know all the assets being bought. You have the website URLs. You have the link to the Amazon storefront, so you can see the products. You can see everything that's going on. But with new prospective investors, we have all of our previous investor reports, and we'll drop redacted versions. So we'll have all the financial statements, and we'll just say content asset one, content asset two, FBA asset one, and it'll have all the relevant financial data. But it won't have the information that identifies it.
Yeah, that was really, really interesting to me when I came into this industry. So I wanted to make sure we mention that to people that are listening that are maybe just hearing about some of these ideas for the first time. Mike, I really enjoyed our conversation. Like I said, this has been a topic of mine that I've been researching for the last year pretty heavily, and I've been really passionate about it. So I really enjoyed chatting about it, and I hope the audience enjoyed it as well. For anybody that's interested in learning a little bit more about your fund, what you guys got going on, more about these types of businesses, where can people go to find you and follow along?
Yeah, go to our website, webstreet.co. So webstreet.co. If you're interested in being an investor, if you're an accredited investor, high net worth individual, like I mentioned earlier, we're testing through a crowdfunding option. Depending on when this gets published, that may be open by then or not. And then, of course, we have a two-sided marketplace. So we're always looking for very experienced portfolio managers that are running their own portfolio of online businesses and that are looking to run a investment fund through WebStreet. Or if you just want to generally learn about the industry, we've been publishing more and more content on how it works. I'd say check out our blog.
Yeah, definitely. I recommend people listening go check out WebStreet. Even if you're not an accredited investor, you're not going to be a portfolio manager, you're not going to make any investments, but you're interested in learning more, go check out their website. They have some cool info there. Go check out Empire Flippers as well. A lot of
Oh,
cool, just see what the opportunities are.
yeah, one thing that I recommend to people that are looking. So oftentimes I talk to people that are looking to build their own online businesses or that are just starting out or that are somewhere along in the process and they have no interest in investing simply because they get a much better ROI on putting it into their own business. And if you have the opportunity to do that, you should definitely do that. The only time you should think about investing is if you want to diversify or you can get a better ROI or you got into the
Or you
point
want to
where
be
you can't
passive.
deploy.
Yeah.
Exactly. Or you want to be passive or you got into the point where you can't deploy any more capital into your business. Even those people, what I would recommend for those, go to our past investment deals. Those are obviously no longer open for investment because they're closed. And then go to each investment deal page and you can see a interview with the operator, with the professional portfolio manager. And we'll ask them a number of questions. What type of assets are you looking to buy? Once you buy these assets, what strategy are you going to use to grow them? What strategy will you implement early on? What strategy will you implement later? What type of risks do you look out for? So depending on whatever you're interested in, whatever flavor or monetization of online businesses, you might be able to find some interesting info in there.
I like to do the same thing. I'll go to Empire Flippers or I'll go to other brokerages or marketplaces that sell these businesses and I'll go on there and I'll see like what businesses are selling, how much they're selling for, what they're doing right, how they're making their money, what they're, and just kind of do like a autopsy, if you will. But even though they're still alive, it's still a business, it's still working. But like I try to dissect it as much as I can to learn from a business that's being sold. I can see how much it's selling for and just learn from it. So yeah, go to your website, check all that out. And yeah, Mike, thanks so much for joining me. I appreciate it.
My pleasure. Great talking today. Bye-bye.
If you read a good book and you choose not to implement anything from it, then it was nothing more than a form of entertainment. I also think the books behind me represent all of the mentors that I've had conversations with in my own time. It won't be noticeable at first, but eventually you'll wake up in this different destination, health, wealth, happiness, and you'll be like, how in the world did I get here?